because this was just ingrained into the real estate market. And we've been doing it this way for so many decades that people are like, I just rather do it the old way because that's what I'm accustomed to.
Yeah, look, I'll be the first to tell you, and most people would think I'm a total traitor for saying this. I think the commissions are too high. I mean, they're way too high. The idea of a 6% commission, which, is not fixed by law. Okay. I have to say that, of course, and it's always negotiated. We haven't really seen real 6% commissions for a very long time. Everybody's doing it for less. And it's negotiable between seller and buyer and realtor. Of course, that's not fixed by law. That would be an antitrust violation if it was. But, that started back when properties cost, I don't know, $1,000, in 1905. Right. Okay. I mean, and properties appreciated faster than inflation. So, it just got all out of whack because, after we went off the gold standard in 1971, or the last vestige of the gold standard, I should say, the way the properties went and inflation went versus everything else was just crazy. So, it's a weird dysfunctional industry. I'll be the first to say that.
Yeah, that's an interesting point. Like if we think back to 2012, and let's just assume that consumer prices have gone up by 50%. Let's just throw that out there for the sake of the example. Yeah. And incomes have gone up by, let's just say 50%. But then home prices have gone up by 100%. Yeah. Now all of a sudden, the real estate agents are theoretically making 100% more than they did with the same rate of commission.
Yeah, it's very it's very out of whack. And let me tell you why it kind of has to be out of whack. The real estate industry, like so many other industries, has really become not an industry. I miss the days where people, and when I hire someone, I like to hire a true artisan, a technician, someone who actually does the fucking work, right? Nowadays, it's like, let's be a marketer. Everything's a marketing business now. And so you have the high commissions attracted so many people into the profession that everybody just became a marketing business rather than a true artisan or technician or someone who actually practiced the trade, right? And I miss that. I really have a lot of respect for lawyers, accountants, real estate brokers who actually are professionals and practice the trade rather than everybody being a frickin' marketer. I mean, listen, being a marketer is where the money is. I'll give you that. But, do I want to hire the greatest marketer or the greatest, technician, right? I want a person who can actually do the thing, and now I miss that in a lot of businesses,
Yeah, that's true. So let's more so focus on prices. What have they done lately? Just at a national level and then at maybe a local level? I know you're probably going to have more insights as to the markets where you actually have properties. So those would be the linear markets, and we can explain that, or the difference between that, a cyclical market and a hybrid market to the individual, and then kind of give me your take on what's been happening on the ground as far as prices, let's just say over the last year.
Yeah, so the real estate market has been boring. Activity has been slow. Our business has been crummy. I'll be the first to say it. It has not been great. And just activity is way down. Activity is about 25, 30% down. And people are just kind of been waiting for something to happen. They've been waiting for rates to come down. A lot of people think prices are going to come down. That hasn't really happened except in a couple of markets. Maybe the trophy market for the worst market in the country would be Austin, Texas, where prices are off by about 14% in residential. And then a couple markets in Florida are pretty oversupplied as well. They've suffered as well. But overall, nationally, prices are up about 5% year over year, depending on what survey you're looking at. We are in a very weird kind of, just this kind of anemic market where it's just really slow and quiet. But I'll tell you, it feels a lot, George, like 2012 right now. It's just been kind of quiet, not that much activity. And, many accuse the Trump administration. Yeah. What? What's that?
I said, except for the prices are the opposite.
Yeah, the prices, I know, sales activity and sales volume and prices are two different things. Okay.
Yeah.
So, prices have been going up because there's just such a shortage of housing in the country, but they haven't been going up much. I mean, demand is down. And, the home is just becoming more and more out of reach for most people. It's, from a societal perspective, it's really not healthy. It's not good.
Yeah, but again, why is demand down? I mean, demand was down back then because everyone thought that housing prices would continue to collapse, and no one wanted to catch a falling knife. And
Right.
so many people were unemployed; they weren't making money because of the recession or the tail end of the recession. And today there's no demand because people just can't afford the price plus the interest rate on the basically they can't afford the monthly payment.
Right. Yeah. It's just too expensive. So, if we see rates come down, and they have been coming down for 7 straight weeks now, and more, when I say that, I'm talking about mortgage rates. But if we see mortgage rates hit, the high to mid 5% range, we're going to see just a massive amount of demand move into the market. That's my prediction. And there's only about 650,000 homes for sale in the country right now. So, you increase demand. What's that?
What's normal based on, you've been doing this for what, 3 decades now?
Yeah.
So what would be a normal number?
About 1.4 million would be the normal number and I have to say this, in 2015. That would have been considered normal supply, which would be about 1% of the housing stock at 140 million. But right now we have about 650,000 homes for sale. So, we're down by more than half in terms of inventory, and that's what's holding the prices up, right? Because the demand is definitely way down. There's way less demand.
Yeah.
And the only thing holding those prices up is the low inventory.
Right. So in other words, just for the viewer, if we just waved a magic wand and over the next month the inventories went back to normal.
Right.
So there was, instead of 650,000 homes for sale across the United States, there was 1.5. Based on the demand that we have, home prices would be way lower.
Yeah. Well,
you finally get to an equilibrium that matches up with incomes to people can actually afford to pull the trigger.
Right. Yeah. Housing prices at 1.5 million, which would be considered normal inventory, but we don't have normal demand. We have much less than normal demand. At that number, I do think prices would definitely fall.
Yeah. All you have to do for the viewer, is look at the price action. So if the price is going up slightly, or if it's flat, or if it's down slightly, if we have all-time low supply, by definition, we have all-time low demand. Because if we didn't have all-time low demand, then the price wouldn't be flat. It would be going straight up. And so if we have this all-time low demand, which is what Jason is saying, and then you do throw on some supply, that you're going to have that price drop significantly until you match up with incomes, until where people can start affording them again. And then the buyers are going to come back in, assuming all else equal with the economy, the unemployment rate, et cetera.
Yeah, no question about it. And George, you said all-time low demand, and also it's all-time low affordability. I mean, we have the lowest housing affordability in 4 decades now. And
when I'm talking about demand, I'm kind of defining that as not only the desire to buy, but the ability to buy.
Right. Yeah, absolutely.
So what's going on with rents?
Rents, interestingly, right, you'd normally, in this kind of market, you'd see rents going up a lot right now, but you don't, because as you know, and our buddy Ken McElroy could talk about this in much more expertise than I can, last year, we delivered a record number of new apartments. I mean, the apartment construction starting 3 to 4 years ago was through the roof. The financing was so cheap. Money was just being thrown at deals. Every developer was building an apartment complex. And that typical complex was what you saw all over America. It was a 4-story, like garden style apartment building with a pool in the center and, 300 units. And those things went up all over the country. And so last year we delivered just a record number of units. And I can't remember the number, but it was a very high number. I just can't remember the number right now, but it was that really softened the rental market with all those new apartment deliveries. And then we did see some conversion, although this wasn't nearly as much as the doomers were saying, of Airbnbs to traditional long-term rentals. We saw some of that conversion occur. Okay. again, that's a drop in the bucket. That was like a nothing burger, but it was a little bit. And so with that, rents have been quite kind of soft. They only went up like 2%, 2.8%. And most of the rent surveys are not very accurate for single family homes like they are for apartments, because the apartment market, it's really easy to survey rents. You just call all of the institutional landlords and say, hey, what's going on? Or you read their annual reports if they're public, and you just look at what they're doing and they'll tell you. But when single family homes, it's very hard to survey rents with single family homes.
Yeah, that makes sense. It's much easier with apartment complexes. So we've got a ton of supply coming online in the multifamily space, and that's keeping the lid, let's say, on rents, which is obviously a good thing for the individuals out there, because incomes have not kept pace with the home prices. Right. And therefore, if rents would have gone up to the same degree, your only other option is homelessness.
And that's no fun.
Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.